Bring on board our market guest as well. We have Anupam Tiwari, Equity Fund Manager of Axis AMC, joining us right now on the show. Anupam, hi. Thank you so much and welcome aboard the newsroom. Let me start with your market strategy call, perhaps over the next 1 year period. How is it looking like? What is your strategy going to be like?
Okay, so if you look at the backdrop of what happened in 2019, we went through a destocking cycle in the economy because of lower than growth expectation, and I think that is stabilizing in terms of couple of sectors. In auto it is clearly visible, and in fact we are seeing a restocking cycle. Of course we are not sure about how the demand will persist, let's say beyond Q4. We need to wait and watch. In couple of other sectors also, if you look at steel, cement, we are seeing kind of bottoming out in terms of destocking. Clearly things look to be stabilizing, bottoming out. However, how much growth comes, we need to wait and watch. And maybe situation would be much more cleaner and clearer by end of Q4 or let's say Q1. So I would say it's a kind of wait and watch, a stable kind of scenario that we expect. And as always, we would advise investors to continue investing with a long-term horizon. That's the key to get through the intermittent volatility, and that's what they should do.
Anupam, you've spoken about a couple of sectors that you just highlighted. Can you tell us which are the ones you're overweight on and which are the ones you'd rather stay away from?
Okay, so generally at Axis Mutual Fund, as a house, we are more positive on B2C stories, generally more consumer oriented, whether it is services or manufacturing, and we look for scalable businesses with good ROCROE, basically where the quality of earning is good. And that's what we continue to do. And of course, depending on business cycle, we keep on changing portfolio construct. But our basic idea is that long-term wealth creation happens more in sustainable earning growth stories rather than in cyclical.
And what about the broader markets, the way they've been, panning out? Do you think now there's a case for building on to the broader markets or perhaps increasing exposure at this point in time?
Yeah, of course, at some point of time it will happen in future that market start broadening out in a big way, and we have seen some evidence of it happening. Of course, this recent event of conflict escalation in Middle East has kind of being a dampener on that. But if you look at November and December, we have seen some kind of market broadening out. And we believe that if the growth bottoms out and starts giving us some positive bias, then this broadening will keep on happening.
Anupam, we're just a few weeks away from Budget 2020. Can you tell us what are your expectations from the budget, or are there any specific themes or sectors that you'll be watching out for?
Given the historical backdrop, it's very difficult to make a view on budget, but of course there is a government has to maintain a very fine balance between fiscal challenge and a need to stimulate the economy. So we need to wait and watch what call they are taking. There are news that there could be a personal tax rate cut. Of course, after giving a very big corporate tax cut, it would be kind of unreasonable to expect too much from the government given the fiscal situation. But so I think people should focus more on a broader time horizon that they want to invest in, look at broader economy rather than just being fixated on an event like budget.
Are you taking any contra calls at the moment?
Of course, we are keep on evaluating stocks which have fallen and whether the risk reward is trade-off is better or not. But broadly, our portfolios are quite stable in terms of our thesis, and which is buying good quality earnings, scalable business models, and more B2C. So yes, we keep on evaluating here and there, which have not been doing and where we see some kind of earning momentum picking up. But as of now, it's not anything material change that we have made in our portfolios.
Anupam, by when do you see earnings recovery kicking in, and at the juncture, do you see any risks for earnings recovery to perhaps play out in full form?
Q3 looks okay. It's not recover as such. Growth is not picking up too much, and broadly, I think market is kind of expecting that. For decent recovery to be visible, we need to wait for at least 2 to 3 quarters more.
All right. Thanks, Anupam. It was great chatting with you and getting in your expectations from earnings, from budget, and a host of sectors that you'll be watching out for in 2020.